Okay, still down almost 300 points for the Nifty, so there's no respite for the bulls at all. But let's get a quick handle on what's happening in the world of commodities now. Manisha Gupta is here. Manisha, good morning. What are you looking at?
Well, Sonia, nothing much changes from Friday to Monday, and we have seen the sell-off continue, intensify actually for many of these commodities after the US Fed raised hike by 75%. That was 75 basis points. That was factored in, but what the markets are really preparing for now is further aggressive rate hikes for the rest of this year as well. So you have a complete sell-off that we've seen in metals. Gold is trading at a 27-month lows, and the crude oil prices, which fell 5% on Friday, hitting an 8-month lows, actually have seen some consolidation come in the morning today. We are looking at 890 go down for Brent. $80 is given away for the WTI crude prices as well. And on the charts, while we are oversold, but the momentum still looks on the weaker side there. So Friday was a 5% decline. On a week-on-week basis, we have seen 7% of a cut come in for the WTI crude prices, 8% down for the Brent as well. And that is pretty much the case across energy sector. On a week-on-week basis, we are down 7% for crude, 11% natural gas, 4% for gasoline, and on a month-on-month basis as well. And by the way, for last 4 weeks consecutively, we have seen the crude oil prices decline every single week, declining by 18% now in last 1 month, 26% down for natural gas as well, as US is looking at higher inventories, higher production, and lower demand from European Union continues to weigh on many of these energy commodities there. The markets are clearly reacting to the fears of rising interest rates and impacting demand. There are recession fears now increasing into the markets. We have the dollar index, which is trading at the highest in 2 decades, and the markets do believe that it perhaps wouldn't stop at 114 as well. You could be looking at higher numbers there. Many of the international currencies have hit multi-month lows to all-time lows as well, and we have seen weak contraction business activity data come in from the European Union and UK as well, telling us that the demand could continue to decline. This quarter actually is now turning into surplus when it comes to the global crude oil inventories there. But the markets, though, will watch out now for the OPEC meeting in the next week, where OPEC Plus may intervene into the markets by curbing supplies. They have done it twice already, and this could be coming in with a bigger quantum there. Also, a statement from Saudi Aramco warning of underinvestment because of the lower oil prices is something that could be supporting the prices. But most importantly, even as China had just about started to open and markets were looking at some demand coming in, we are looking at the Chinese National Day holidays from 1st to 7th of October. So this is a time that you could be looking at more choppiness continuing in case of the global commodity prices. The belief now is that we could be looking at some support coming in for 82 to 80 in case of Brent prices in this week.
All right, Manisha, thank you very much for that. So that's commodities very much in focus. The market is down 300, so we are pretty much almost at the day's low, 17,032. Well, it's time for a quick commercial break. On the other side, we will bring you our Citizens Monetary Policy Committee. My colleague Lata will get chatting with Samir and Chakrabarti of Citi, Soumyakanti Ghosh of State Bank of India, Sonal Verma of Nomura, and the former chief statistician Pranab Sen, Sajid Chinoy of JP Morgan also on the panel. What to expect from RBI MPC meet? Stay tuned. That's coming right up.